Good afternoon, everyone. Can everyone hear me? Good afternoon.
Yes, we hear you, Damilare. Good afternoon.
Welcome to Octamile Webinar Series. Good afternoon. We'll just wait 3 more minutes for our guests to arrive, and then we'll begin 4 p.m. sharp. We won't keep anybody waiting, we promise. So please give us a minute. In the meantime, please ensure that only the guest speaker and the host can leave their video opened and they can unmute, but the rest of us have to ensure that we are muted. Thank you very much. Hi, Nifemi, you can unmute your video, please. So our guests can see your face when you come in. So please do try to unmute your sorry, I said unmute your video. Just try to ensure that we can see your face. Right now, we're just seeing your profile picture. Thank you. It's almost 4 o'clock, 1 minute to 4. We'll be starting very soon. Okay, it's 4 p.m. Good morning, everyone. Sorry, good afternoon, everyone. Welcome to Octamile Webinar Series. Welcome our guest speaker, Nifemi Oluboyede, and to everyone that is joining us, welcome. So we're going to do a brief introduction of our speakers. Yep. Welcome to everyone from Africa, joining us from Africa, because we know people are joining us from all over. So welcome to everyone joining us from different parts of Africa. Welcome to the Octamile Webinar Series. Today we have our host, Berodara. Berodara is the CEO of Octamile, a VC-backed Insurtech startup focused on enabling financial protection for Africans. He has over 10 years of experience building high-performance teams across e-commerce, online marketplace, and fintech businesses in Nigeria, Ghana, and Kenya. Bero has an MBA from the Lagos Business School and is a member of the Chartered Insurance Institute in Nigeria. Our host for today, our guest speaker for today is Nifemi Oluboyede. Nifemi is presently the growth and product lead for Credit Direct. He has experience which cuts across operations, product roles in traditional banking and fintech space. An example will be Zenith Bank, System Specs, also called Remita, Team Apps, Carbon, also called One Finance, Fair Money, Kuda, and currently heads product growth and partnership at Credit Direct. Is a certified digital finance practitioner from Tufts University, as well as he also has a bachelor's degree in economics from Great Ife, Obafemi Awolowo University. He also currently serves as the General Secretary of the Association of Digital Finance Practitioners. So we're going to dive right in because we said we're not going to waste any time. It has to span within 1 hour. Now that I've introduced our guest speaker, I've introduced the host for the event, for the webinar. So we're going to dive into the first question, and it's towards Nifemi Oluboyede. So let's dive into challenges lending companies face in risk management, right? We know that the topic for today is harnessing technology for effective risk management strategies for loan companies. So the first question I have tailored towards Nifemi is, can you share some key risk management challenges that loan companies commonly encounter in today's dynamic environment? Nifemi, you have the floor to answer that question.
All right. Thank you very much. Okay, so I can see Ken Big, but I think I know you as Damilare.
Yes, I'm Damilare.
Okay, yeah, and thanks a lot to Vera and the Octamile team for having me. So to speak towards some of the risk-related challenges that you typically find, I think those can be categorized into 4 broad categories or segments, right? You have risk that is preventable, you have strategic risk, you have external risk, and you have, internal risk, right? And, if you look at these different segments, you would find that it probably speaks to, some of, if not every kind of risk that you think about, right? From the risk of, the human beings working within the system, to regulatory related risk, to even risk around processes that are outside of your control. So pretty much preventable risk, simply put, is risk that you could have prevented. Think of you're checking somebody's bank statement and it shows that he moves his money to another bank a lot. You could have asked him for a second bank statement, for instance, so that you have the proper view. But the underwriter has decided to just check the one bank statement and has made a decision based off of that. Those are things that are preventable by creating processes or a slight difference or variance in the decision that a human being makes in the time. Strategic risks could stem out of think of strategic risks as maybe even regulatory rights. So things that, they're not necessarily in your control, and to a large extent, they may have a significant impact when that happens. External, pretty straightforward, is, outside of your environment. So think of, some of the government policies that are happening now. The cost of fuel has gone up. That has some direct implication on the ability of people to pay back, because it translates into a reduction in disposable income, because people are spending more on some of the things that they're supposed to be doing. And then you find that overall, the DSR that has been advised, the DSR being the debt service ratio, right, is then affected because most people, their earnings have not changed, but their expenses are going up. And then of course, internal could be lifestyle choices. You just change apartments, you increase your rents and stuff like that. So again, these 4 different segments would pretty much cover a lot of the risks that typically loan companies would face.
Okay. Thank you very much, Nifemi. We'll go straight to the next question. In your experience, how do you think technology can effectively be leveraged to enhance risk management practices? This is within the lending, the loan industry, the fintech industry. So how do you think we can effectively leverage technology to enhance risk management practices?
Okay. So I'm going to try to explain this without completely geeking out, right? Because it's a very interesting and broad segment. But first things first is, we might want to even start by unbundling different processes or the different stages of, the lending experience. So from, you saying, I want to take a loan to whoever you're, asking for that loan from, what they need to do, right? So as a lender, think of this from the lenses of, even things like identifying the customer, to the underwriting process, collection of data, scoring them, with different credit scoring models, thanks to some of the data that you potentially get from credit bureaus, to you even having some form of decisioning process, right? To say, if you take data from point X, point Y, point Z, how do you then harmonize those different data points and translate that into a lending decision? Then even after you must have disbursed the loans, right, how do you manage the life cycle of that loan? These people end up being customers. How do you manage the relationship that you have with these customers? And, God help you, you're delivering this through technology, right? You also need to protect yourself from cybersecurity and the likes. And, equally as important, which is something that is grossly underemphasized, is that oftentimes you also need to insure some of these loans, right? Because depending on the type of loan or the purpose of the loan, you typically find, some insurance partners who will be happy to underwrite that loan and provide some form of cover. And I guess that's where the likes of Octamile come in. But, if we then unbundle, these different processes, you also find that there are different players and different forms of technology that help you to be able to get these things done. So if we pick identification, for instance, we have we have tech companies who specialize in, identity verification, think the likes of Identity Pass, Doja, Smile ID, who would, provide you verification as a service, right? They're able to help you verify government IDs. In some cases, they're even using technologies like OCR, where they can, look at pictures, pass text from pictures, and use that to verify against registered databases. For your underwriting and even collection of data, you're probably deploying a mobile app or a web platform where you would collect different forms of information from your customers. And then you're looking at open API platforms to be able to get, things like bank statements, things like credit bureaus. You have the likes of Mono, Okra, who do that at the moment. For your credit scoring and modeling, you also have local platforms like Messina, like Periculum, who would help you to create some models for decisioning as well. So again, so that I don't bore us with, just mentioning examples, you will find that across these different facets, you are given one loan, but you probably identified, 8, 9 different processes that may potentially have 8, 9 different, even technology service providers. And those are some of the things that make, lending in the digital age very, very interesting. Because back in the day, what you would have is, you fill a form, you submit your bank statements, and you see all these things that technology is now doing. It's somebody that is going to do that. I remember, about a year or two ago, I had a run-in with an NDIC staff. It was quite hilarious because they were explaining some of our processes to the guy. We're saying, we use AI to do this, to do that. And the guy just paused and looked at us and was like, you see all these things that you say AI is doing, that when he used to work in the bank, there was this woman, and once that woman picks your loan form, she can already tell you whether or not they are going to give this person money. That the woman will just say, we can't give this one. And by the time you end up doing all the checks, right, she was almost always right. And they said that woman's name is Madam Wei. So it was like, you see all this AI that people are doing, that's Madam Wei. So, right, typically, and it actually makes sense because at the end of the day, you're training your machines or your systems to be able to make those decisions even better than human beings, faster than human beings would have made them. Because guess what? These are natural languages that are being processed these are natural human processes that you're looking to automate. So at the end of the day, right, it's a very broad spectrum and very interesting as well. But one thing I will say that technology has done to the lending process is it has sped it up. It has also allowed it to be able to scale significantly. So I'll just rest there again so that I
Thank
don't,
you.
I want you that I might geek out on this one. So yeah.
Yes, you did. Thank you very much, Nifemi, for your response. We talked about collection and analysis of data, cybersecurity, embedded insurance. So probably right now I should focus on embedded insurance, right? And this question is tailored towards the CEO of Octamile, Series. My next question is, now that Nifemi has made mention of embedded insurance as a technological tool, can you tell me one, maybe not one, maybe so many as you can, one innovative approach on how embedded insurance can serve as a technological tool for managing risk in the lending industry? So how does embedded insurance come in when it comes to the lending industry in relation to technology? Mary, you have the floor.
Thanks, Larry. So, embedded insurance sometimes sounds like a buzzword, but essentially it's trying to give people the relevant insurance products at the right place at the right time, like at the point of purchase most times. For Octamile, technology essentially says that will help our partners move away from a very manual process of ensuring the customers. Nifemi mentioned manual processes in the early days of banks. That's still a lot we see, but we work with the insurance company to make sure that relevant policies can be, for lack of a better word, vended instantly at point of sale or many. A good example is credit life insurance, which is like a loan repayment guarantee product where certain events like illness, death, sometimes even sensitive because but main events that most portfolio is exposed to being able to find this other
Sorry, Mary, can you hear me? We lost you for a moment there. Please, can you just
Can you hear me?
Yes, we can hear you. I can hear you clearly right now. Like right now, I can hear you clearly.
Yeah, so I think so credit life is one example. Said like loan repayment guarantee event of multiple events like critical illness, death, or job loss, helping lenders to reduce their loan default.
Okay, thank you very much. So we talked about credit life insurance, embedding credit life insurance during the customer journey, to ensure that your loans are secure and to avoid, like I always say, stories that touch. Okay, so we've talked about embedded insurance, right? We also know that there's something called business insurance for loan industry, right? Can you give us tell us how you think business insurance fits into the landscape of risk management for loan companies? We know that we have so many types of business insurance, but yeah, what are the types of business insurance you think that would suit this particular industry?
Okay, so still starting off from the embedded insurance part, some of these customers also have inventory, have shops, have assets, which protected. So see those risks as business risks that could affect that business. So first of all, that's an opportunity to offer fire insurance, offer asset insurance, life insurance. But even for the lending business itself, Nifemi also spoke about cyber risks. So cyber is a growing trend also where cyber insurance comes in to help to reduce the business risks in the lending. as many risks as a business or an individual can be exposed to, or an executive or an employee in a business, like health insurance, life insurance. Eventually, that's an opportunity to mitigate risk. Insurance helps to do that, definitely.
Thank you very much. We've talked about embedded insurance. We talked about business insurance. Embedded insurance deals with technology. Business insurance works on coverage. Can you give an example, a case study or an example of a company who have made use of embedded insurance, like a case study, and what was the outcome?
Is that for me?
Yes, Bero, this is for you, please.
So there are several organizations where we've partnered with on topic of embedded insurance. To name a few, Traction, Vend Insurance, Vend Tech, and quite a few others like Credit Bank, even more recently, Progress Bank. So I think, and there are multiple use cases where specifically it's being deployed. We've already talked about credit life insurance, where we're using our APIs, easy to integrate. In a matter of days, APIs can be integrated, give you support end to end. So like, you don't have to build that infrastructure on your end, just see us as your house Insurtech partner. We also all have a brokerage partner, so we are able to offer even back-end support and end-to-end support, making sure that when claims happen, it's a smooth experience, both for the business and for the for their own customers who are insured. I think it's a huge opportunity, and we're always excited to explore supporting the entire credit industry, because we see it as a very, very huge sector, growing as well. Of course, we want to make sure that defaults is not something that affects the industry, and we're supporting them.
Okay, thank you. So you didn't respond to the question where I asked like a case study, an example of situations where we have actually worked with loan companies to help them mitigate risk.
Maybe you didn't hear me very well. So I gave the example of a couple of our partners, so like Traction, where we've helped them to embed credit life and fire and burglary insurance into their for their customers. Traction gives out business loans to SMEs and MSMEs, so thereby helping them to reduce loan defaults in long term, and also, in fact, also helping to increase customer trust and willingness to even take more loans.
Okay, thank you very much. Thank you very much for your response, Bero. We talked about how Traction is one of the loan companies under Octamile who have embedded Octamile insurance products, and how right now Traction embedded Octamile's credit life insurance, fire and burglary insurance, and that has helped them to mitigate issues of risk and to provide easy access to loans for their customers. Okay, back to you, Nifemi. Yes, we are coming back to you. We've talked about embedded insurance. We've talked about cybersecurity and all of that stuff. So we're going to go back to, let's start from the beginning, from where we started from. Please give me a minute so I could ensure that we have everything on the screen. Please give me a minute. We're done with this. We've talked about this. We've also talked about, okay, yes. So Bero has given an example, right, of companies we've worked with, right? Companies that have used embedded insurance to ease access to loans, to mitigate risk, and to ensure that their services, their buildings, their data is safe. So you've talked about different technological tools, different spaces in lending where technological tools can actually be used. So I'm going to ask you the question, can you give an example? Because we know you've worked with so many companies, Fair Money, Rent Money, and all of the money. Can you give an example of a company you've worked with that made use of technology to mitigate significant risk?
All right, thank you very much. So again, everywhere we've probably used technology for our entire process. But I think first things first is typically when you're thinking of risk mitigation, before things that come to mind, is what exactly are you trying to do to the risk? Are you trying to reduce your risk? Are you trying to transfer the risk? Are you trying to retain the risk, or are you trying to avoid the risk, right? Because these four things, having clear understanding of which of these four things you want to do by time also plays a significant role in how you want technology to help you with it. And I'll give you an example. So in lending generally, right, you want to know enough about your customers to be able to make decisions. However, there's the concept of also validating assumptions. And I'll speak to, risk retention, because I'm sure, somebody is wondering, why would I want to retain risk, right? If anything, you probably want to avoid it or transfer it to the next person.
Exactly.
Just making sure that the risk is no more with you, right? However, in lending, there are times when you probably just that this customer is funny, but you keep the customer just so that you can train your systems to know funny customers, if that makes sense. So typically when you're profiling your customers across different risk categories, you have the guys who you can already tell that these are very risky customers based on different data sets, maybe even some psychometric data as well that you must have collected. And you're then training your system to say, you know what, this very risky guy, I'm still going to give him a loan. Maybe you're even using a risk-based pricing strategy, right? Where you now say, okay, this guy, very risky, give him higher interest rates. But what's most important is you're also giving that loan with the intention of measuring the behavior afterwards. So you're saying, I'm giving 100 people very risky customers loans. Are they going to pay back? Right. And in 2-3 months, you're checking their behavior to see, did they outrightly not pay back? Or, did some of them pay back? If some of them did pay back, what is peculiar about those ones that paid back? Because then you have more information about these seemingly bad guys, and you can, improve the quality or the efficacy of your system against those kind of people. So think of it like ethical hacking, right? Where you also bring in hackers to come and try their luck on your system, just so that you can tell how potent or how safe your platform is. And then when you're thinking reduction of risk, I think that one is pretty straightforward. You're saying, you're at X risk level, you want to de-risk to a certain level. So some of the things that, life or real life hacks, in the lending space for that would probably mean, so I remember one time when I was at Carbon, we had done something where we were acquiring new customers, and we said, if you're a first-time customer, take a loan at 0 interest, right? It was really nice. We had people who had clean credit reports, who had never taken a loan in their lives, came in, took a loan for the first time. Yay, exciting moments. We had people that were brought into the credit world for the first time. But, 30 days later, when it was time for repayment, because these were people that never really taken loans before, they never really understood the repercussion of defaulting against the financial institution. We had a significant chunk of them who missed out on their first payments, right? And for us, it was bad business, right? Because first off, you are giving them interest free. They are not now paying back when they're supposed to pay back, right? Which means first off, you've lost making money. Now you're now losing, because again, when a loan starts to default, or when it starts to be late or it's past its due date, you're expected to provision a certain percentage of the principal as loan loss provision. So this is a loan that you're not making money on. You're now using your own money to provision for a loan that you're losing on. So what we then did in response to that was, tweak the system to say, as opposed to giving out a 0% interest loan, we charge the actual face value of the interest, and we put in a caveat, say if you pay back on time, we would refund you that interest, right? So it was still 0%, but only the guys who paid back, were getting the 0%. So yeah, that's probably a real life example of
So like
reducing
based on
risk.
what you said, you mean what I could get from that is when you're talking about risk, you talk about the part of how information was really important, how you, notwithstanding that the fact that these people might not pay back the loan, because you want to understand their behavior, because you want to gain new data, you ensure that, I mean, it's a go, let's go ahead and give those people the loans. And that actually helped you guys in creating new strategies for your company. If I'm correct, that's what you said. That's one of the things you mentioned right now, right?
Yeah, pretty much, yes.
Okay. So let's talk about the best practices. Like we've talked about how different examples, certain places where technology can be used in the loan industry. So what would you say are the best practices for integrating a risk management system?
So again, it's a lot, right? However, like we've attributed over the course of this conversation, you'd find that with the advent of technology, these things are becoming a lot more interesting. And technology is providing us with a lot more options to make faster decisions, maybe even smarter decisions than we've been making, with human beings. So what you typically find these days is, technology platforms or services that help with, that loan decisioning process. And when I say decisioning, right, it probably encompasses so simply put, you think of it as, that thing that is responsible for looking at all the data that the customer has provided, applying your different credit risk policies, and then making sense of, the data against the policies and coming out with a decision, based off of the different things that you put in there. So typically, for credit decisioning systems that you find around, three things come to mind, right? How much data are you able to pump in there? So typically you're breaking down your data sets into personal data, transactional data, maybe in some cases employment data, or even business data, and some form of psychometric data, right? And I'll give an example just before I run through the other part. So think of, Nifemi versus Damilare. Nifemi is an upcoming tech bro, low-level product manager, earning 150K in one small company, whereas Damilare is a big madam, doing big things, probably earns double that amount where she works, right? Both of us, so again, case in point, Nifemi earns 150K, Damilare earns 300K, but Nifemi is a single guy who lives in Oshodi and in a two-bedroom apartment where he pays 120K before he people come out. Again, that number will not be correct. Whereas, Damilare on the other hand, she's an island big girl. She stays somewhere around Agugi, where she's paying about 750K a year for a really nice, comfortable self-con. Right, already in terms of our annual expenses on rent, I'm spending, or rather, Nifemi is spending within his monthly income, whereas she's spending 2.5x of her monthly income on rent, right? Maybe she makes it a point of duty to travel every summer, right? And again, I'm seeing all this information from her bank statements because I'm seeing the Wakana debits, right? Whereas Nifemi, on the other hand, his own form of relaxation is taking a trip to redemption camp every first Friday of the month to go and pray his hearts out, right? What then happens is, we both apply for the same loan. By the time, we start looking at these sort of behaviors, you would find that we've started to create risk buckets, right? So on the surface, it might look like there's no reason why, a Kende should not get a better loan or a better deal. But you'd find that maybe every month, Nifemi is able to still put aside 40, 50K of his income. Whereas by the time Damilare finishes flourishing every month, she's only leaving like 30K that is left. And that's 30K of when she's not even paying tithes, right? So again, I'm just using that as an example, right? And what's those different, micro data sets that you're picking from people's bank statements are the different things that these decision systems are piecing together to first of all create some form of risk profiling. At the end of the day, again, the government provides us with a debt to income ratio, which is around 33% in Nigeria. So of my own 120K, what did we say? I'm getting 150K, right? Yes. Of my own 150K, I'm only allowed to take a loan, lenders are expected to give me a loan where my repayment should not exceed 50,000 naira a month. Whereas in her case, it's 100,000 naira a month. But if we've done the math and we see that she barely has 30K left a month as of today before she was taking the loan, even though she should be able to pay back 100K, her current lifestyle choices means she won't be able to do that, right? And these systems are able to process all that information in split seconds, max minutes, and make a decision to say, okay, we can give, Damilare a loan of 500K for 24 months because she will be paying back, about 20-something K a month. Whereas for Nifemi, we can give him a loan of 200K for 18 months because he'll be able to pay back, X amount every month. That is, a practical example of how you would see some of this decisioning, right? And today, the two major arguments around decisioning systems would typically be, should it be an AI-based system or should it be a rule-based system? Personally, I'm a fan of rule-based, even though, we're gradually moving to a world where AI is a lot better. If you have big enough data for your AI to learn well, then maybe you can experiment with AI. But typically what you'd find is, the Nigerian demographic were not one that are heavily predictable, right? Because, for instance, you've seen lenders who would say gambling is a red flag, right? But, I was in the conversation earlier this week, for instance, and one of what we were talking about was gambling is not necessarily a red flag, right? Because you have people who gamble and they gamble well, if gamble well was word. Right, meaning you see them gamble today, you see maybe they pay Bet Niger 50,000 and 2 days later, Bet Niger is paying them like 700K. Again, that's good business, right? So is that the kind of person you wouldn't want to lend to? So it then takes us to, conversations around maybe gambling is not so bad, but the velocity of the gambling is what is bad, right? So again, these sort of systems, in a split second, you can even experiment where you say, you're checking for not just gambling behaviors, but the velocity and the value against the income. So you find people that say if somebody earns, or you find lenders that say if somebody earns 100K and at any point in time is gambling more than 10% of his income, that's what makes him risky. Again, those different, alternate data that can then be processed to make lending decisions. I'm sorry, I think I was geeking out again. So
no, that's pretty fine. Okay, so I'm going to take you back to I think it was the second question I asked you when you were trying not to geek out, like the aspect of lending processes where technology can be used. I'm hoping you could talk more because I could see you were trying to not say too much and not take our time, but I think we do have a little bit of time. So I'm going to take you back to the cybersecurity and fraud prevention, loan origination and management, credit modeling and scoring, collection and analysis of data, and customer relationship management. So I'm going to take you back to that. So can you give more extensive information about these different aspects of loan processes and how technology can be used?
So I think you now actually want me to geek out. So, no problem. Okay, so I think I had started to sort of delve in that direction, even from this last question, right?
Yeah.
Because you would find that the opportunities or the capability of technology is super limitless, and it's just sometimes it's just you sitting down, to think of use cases where technology helps you to do X, Y, Z. For instance, some years ago, it felt like the most insane thing when you're signing up on an app and then they're telling you to take a picture of yourself or a selfie just so that they can take that picture and match it against what you have in government databases. But guess what? If you enter the room and say that now, at least in this country, or maybe in Lagos and Abuja, right? Let me not generalize too much. They'll probably look at you and be like, what generation are you from? And doing that since, right? Because for instance, I remember the first time, I worked in a company where we did that. This was like 2019. And yeah, it was interesting. The people that provided that service for us were charging us, I won't say arm and a leg, but it was pretty chunky, right? A few cents in dollars, maybe a lot of money in naira. But again, the point was that was an example. Again, some of these things that I talked about around decisioning systems, there was a time when a lot of the things I was saying would have sounded strange. But here we are, 2023, people are a lot more aware of some of these things. Earlier this week, I had a company that came to pitch their solution. And what their solution does is you pretty much just upload a bank statement on their platform, and literally in about 10 to 15 seconds, they would tear down that bank statement. And when I say tear down, pretty much they'll tell you, oh, okay, this 6-month statement in the last 6 months, this guy had a salary of X amount every month because they've picked out the narration of where there was salary in the narration and it was recurring 6 months, back to back. They'll tell you that, oh, okay, in May it was paid on the 25th, maybe one of the 25th was a weekend, and it was paid on the Monday. They will tell you, this person spends X amount on ATMs monthly. This person spends X amount on POS transactions monthly. That level of breakdown. And, you might start to ask yourself, oh, wonder of the world, the 17th wonder of the world has just happened. But again, it now reminded me of, my time at the likes of Carbon and Nifemi. And this was as far back as 2019, 2020, when we had to literally build out SMS packets, right? So yes, these ones were using a PDF uploaded, but back then to be able to analyze, customer statements, we didn't have the likes of Okra and Mono then, they were not even in existence. So I feel like lenders now even have it really easy, no offense, right? But back then, it was SMSs. I remember having to open, I think I had like 17 commercial bank accounts at some point because I needed to open those accounts, see what the SMSs of the banks looked like. And then, with our data guys, we had to create some form of regex to be able to read those SMSs. So we studied the SMSs so much
what does regex mean? Because not everybody understands some of the terms you use. So please try to help us simplify it. So what does regex mean?
So regex, simply put, is regular expression. But, it's to not make it sound complex. When you get SMSs, especially the structured ones from your banks or from even some of the pre-configured messages that companies tend to send out these days, there is some order and structure around it. So that when your bank sends an SMS, hold on, let me pull out actual SMS so that I'm giving an example that we can. Okay, so I'm bringing out a random SMS from FCMB, right? The first thing that all the FCMB alerts will have is CR or DR amount, right? 2 letters, which is credit or debit, space, amount, column. Then the amount, right? The amount is always in Nigerian Naira, which is NGN, followed by the number characters. So if I picked an FCMB message, I can already know that the first 6 characters will tell me if it's a debit transaction. In fact, the first 2 characters actually will tell me if it's a debit transaction or not, because it will read DR or CR. So where it's the DR, I know it's a credit. Where it's DR, I know it's a debit. Then after the column, I know that there's a value that will be passed. So I know that's the transaction amount. So if the transaction is a CR and there's an amount, I already know this person receives a credit of this by the time, the system is, reading this SMS. So typically what it is doing in the background is it's converting that SMS into, think of it like, dumping it in a table where it's now easier to make sense of, because you're now reconstructing a bank statement, but with SMSs. So you're saying, Damila's accounts, credits, debits, amounts, and then of course balance. You're able to pick the balance from the SMS as well, because you see BAL, followed by what the balance is. In the description, you would also see what the payment purpose is, right? So you can pick credit or debit, you can pick the value, you can pick the balance. And the description is the interesting part, right? Because you see a lot of long text with different meanings. Then you now have to create things for like statements, right? Looking out for descriptions that have maybe salary, dates, descriptions that have, especially for card transactions, very interesting as well. Because for every card transaction, you would always see, in fact, any card transaction you see, at least from a Nigerian bank, there are only 3 options as to what will precede it. Either it starts with POS, either it starts with ATM, or it starts with web. And that tells you the channel where that card was used. ATM, of course, the person has been in draw. POS, he has paid either, in a store, he has used an agent, for POS. And then, of course, web is, he has used it online, right? And then you're probably able to tell the name of the merchant, because oftentimes that comes with the description. So if it's a supermarket, if the name has not been truncated, you will find it there. And you are able to then piece out the channel as another field on your table, right? And maybe the purpose from the description. So sometimes, there are some of those data sets that might not be as clean as you want, especially in the description field, because it's less structured and more open text. But you're oftentimes able to pick on things that are short, like the transaction dates, debit or credits, the amounts, the balance. And yeah, a good example. I'll pause there.
Okay, thank you. So based on like what you said and your bio, you work with Zenith Bank, you work with Remitab, you work with Team Apps, you work with Carbon, you've worked with Fair Money, you've worked with Kuda, and now you work with Credit Direct. Okay, so we know that you do not work for an insurance company. All of these companies are fintech companies, lending companies. But would I also like to hear from you, like where you think insurance comes in. Okay, so we talked about embedded insurance, as to how embedded insurance ensures that your customers are protected, the loans that you give them are protected, right? And like in the case of Traction, even their businesses are protected. Traction is trying to avoid stories. Let me use it in Nigerian terms, stories that touch, right? So they protected they protected the businesses against fire and the likes to ensure that at the end of the day, they get their loan. So for all of these companies, fintech companies, loan companies you've worked with, where do you think insurance comes in? Can you just like tell us what you think?
So yes, I think as a lender, right, insurance is almost always, for lack of a better word, is almost always at the back of your mind, right? And it depends on how you choose to define or express insurance. The entire gymnastics that we go through to even assess a loan before giving out credit is some form of insurance in itself, right? Because you're trying to understand the customer and you're hedging your risk. Say, after everything that I know about this person, can I, in good faith, expend some level of funds to that person? The interesting thing that concepts like embedded insurance now help us with is to say, after we must have done all that hard work that we know how to do, we're still adding that extra layer of safety, right? Because guess what? Despite all the checks, a lot of lenders will still tell you they have interest in NPLs. However, where insurance comes in the most is when you've taken a good chunk, a good look at the chunk of customers who default, and you're able to identify, the unique markers for their defaults. And you'll find out, for instance, that a credit life insurance comes in handy, especially when you're giving out loans to, either workers or, salaried workers or even business owners. Because what that helps you with is, in the event that they lose their jobs, which might be one of the biggest reasons why they might go into default, in the event that, for whatever reason, they become incapacitated, right? Insurance is there to make sure, like you said, there are no stories that touch. Because, oftentimes I think people forget also that lending businesses are people businesses at the end of the day, right? People work in those companies, and when people don't pay back, the lights potentially, risk being turned off. And, insurance is that partner that helps you to potentially keep your lights on, especially when you have those type of customers. So think of insurance companies as maybe not the generator, but the inverter that is the backup to, lending companies.
Thank you. Nice example. Maybe not the generator, but the inverter. Thank you. So because at the beginning of this webinar, we said it's going to span for 1 hour, 4 to 5. So before Nifemi talks about gives his final thoughts on the topic, harnessing technology for effective risk management. So I'm going to bring in Ade Fisayo is the operations manager for Octamile to give us an overview of what embedded insurance actually really means. Then, Nifemi has talked about the role insurance plays in protection of the loans you give out, protection against loan default. He called it the inverter, probably not the generator, right? So to give you an overview of what embedded insurance really means, I'm going to call the operations manager of Octamile, Ade Fisayo. You have the floor. Can you just give us a brief overview of what embedded insurance is all about?
Thank you. Hello, everyone. Okay, embedded insurance. I want you to see embedded insurance as you are going on a platform to purchase an item, or you want to move your goods from point A to point B. And at the point of checkout, you have the option to add insurance. So insurance is automatically added to a purchase or a delivery you are making. And even the case study we gave, Traction, you are giving out a loan, but automatically embedded insurance is added. So what embedded insurance aims to achieve is, just in case anything happens along the line, you as a customer are protected. The business itself too is protected. So in summary, that's like what embedded insurance is.
Thank you very much, Ade Fisayo. Okay, so we're rounding up, and Nifemi, before we round up or before we take questions, if there are any, can you give us your final thought? We've talked about cybersecurity, we've talked about data underwriting, we've talked about embedded insurance, we've talked about different kind of risk, we've talked about different kind of practices, right? For the best practices for risk management. Can you give us your final thoughts or advice? Because we know that some of our audience are coming from the lending space, the loan space, the fintech space. So can you give us like your final thoughts or advice on the topic, harnessing technology? Probably there's something you missed out, or there's something you feel like they need to hear, right? So can you like brief us of that before we end the meeting, the webinar.
Okay, thank you very much. So I would say that, the place of technology in, lending or credit as a whole in today's world cannot be overemphasized. Maybe before now, I remember the analogy I gave earlier. Maybe before now it was the Madam Years of this world who were responsible for, just looking at an application and be like, or giving money. Again, Madam Enye can only review so many loans at the same time. I once worked in a company where we were, at the time, we were giving out roughly 6,000 loans a day, and we had between 18 to 25% acceptance rate, which meant if we were giving out 6,000 loans, we were processing about 30 to 35,000 applications in a day, right? I don't think a 100-man room full of people would have been able to process those many loans. And, what that taught me was, yes, you might be able to do it right, but if you want to do it at scale, then definitely.
No, sorry, Nifemi, we can't hear you. Nifemi, can you please unmute again? That was a mistake.
Oh, okay. I think you muted everyone.
Yes, that was a mistake.
I was caught in the crossfire.
Yes, you were.
What was the last thing you heard? So I know where to.
I'm sorry, I was distracted by trying to get it done.
Okay. Yeah, so I was saying that in one of the places where I worked, at the time, this was about 2 years ago, thereabout, we were disbursing about 6,000 loans a day, right? With an approval rate of about 18 to 25%, which meant, if we're giving out 6,000 loans, we're processing about 30,000 applications, right? And I was saying that I'm not sure, a room full of 100 Madam Oyenyes would have been able to go through 30,000 applications in a day on a daily basis. So that, helped me to see firsthand why, yeah, you might do it right with human beings, but if you want to do it at scale and also do it right, then technology definitely has to be utilized. On a final note, I would say one of the things that I wanted to talk about earlier, which I think I missed out on, I think is almost like the credit risk 101. If you've ever attended any of all these credit risk trainings and the likes, is the 5 C's of credit. So if you're on this call and you're not really a credit centric person, that's probably one takeout that you can have from this conversation, right? And what are the 5 C's of credit? You have character, which is the character of the person, who is applying for that credit facility. You have character, you have capital, you have capacity, you have collateral, and you have the conditions, right? Once you're fully clear on these 5 things, I think that's like the first step to even understanding a lot of the dynamics around credit risk. So yeah, on that note, I would like to say thank you to you guys for having me. It was fun.
Thank you very much, Nifemi, for reaching out a lot of times. Okay, so we're going to take if there are questions and answers. Sorry, questions, and Nifemi obviously has answers for every question you have. But before I do that, so the host of this webinar is Octamile. Octamile is an Insurtech company, and like we talked about, embedded insurance is one of the products we have for companies in the fintech space, in the loan space, in the banking space, and other industries, right? So after the webinar, if you want to know more about Octamile, you could just go straight into Google and type Octamile, and every single thing you have to know about the company, you get to see that. So does anybody have any question? If you do, you can unmute. We just have like 4 minutes left to 5. Or you can drop a message in the chat section. Does anybody have any question for Nifemi? Something you do not understand? We have 4 minutes before that call. Any question? Okay, so I'm not seeing any question. I do not want to conclude yet that there isn't a question. We have 3 minutes. Okay. So you can Alistair, if I'm correct, you can unmute and talk. Yeah.
Hello, good evening.
Good evening.
Oh, okay. So my question with regards to embedded insurance, I know it is a very welcome and great initiative. But my one question is, there is still a gap in insurance with regards to customer sensitization. So yes, when we have embedded insurance, it makes the process so much easier with onboarding and even claims management. The entire process is so much easier, but there's still that key element of a lot of the times, many people do not know the scope of cover. So I'll give an example with when you book a ticket online, with a simple click, you can get travel insurance together with your tickets that is embedded. But many people are not well aware of what that covers. I don't know if there's any efforts in place to, kind of bridge that gap.
Okay, so can you hear me? Okay, so Nifemi isn't the one to answer this question, and I actually was distracted a little bit. So I'm going to chip it to Ade Fisayo, the operations manager. Fisayo, please, can you answer the question if you are here? Can you please unmute? Thank you very much.
Yes. Okay. Hello. Okay, so you mentioned, if I got your question, you said, how are we working to bridge that gap of communicating what embedded insurance is to customers? Am I correct?
Yes.
I think in addition to that, he was also gave the example of travel insurance and the fact that people are not readily aware of what they're covered for, and how do we intend to any airports that currently help people with that.
Okay, so generally, like we at Octamile, when we partner with businesses, we always advise them. You do not want a customer to just purchase a product blindly. We always encourage them to at least give a brief of what the product is about, what it covers and what it doesn't cover. That way, a customer knows, okay, if anything happens, let's say I purchase a device, I need to know what my device covers, what the device insurance covers if I'm going to add it. Because if I have a claim, if, for example, my phone falls down and the screen gets damaged, if the insurance doesn't cover screen damage, just an example, and I go and make a claim, the customer will be furious, saying, oh, I paid for insurance and this is not covered. So basically, what businesses need to do is, when businesses decide to add insurance, like travel insurance, to the travel experience of a customer, giving the customer the option to add insurance, it is very important for them to put, even if it's a little description of what the insurance product is about. And even before that time, if they decide to add insurance, they need to be able to communicate to their customers like beforehand that we as a business, while venturing into a new thing, we want to start offering insurance on our platform for customers to protect customers from this. And they need to be able to let customers have an idea of what this product is about. So businesses need to take ownership of this, of describing what the products are, what it covers, and what it doesn't cover. I know they are not the experts. Now, when the customer now has specific questions regarding the product, then they can try to reach out to experts, like their business, like their insurance partner or the Insurtech partner they have, to provide answers to such questions. I hope that answers the question.
Yeah, that was very helpful. Thank you.
Okay.
Yeah,
I'm guessing. Thank you very much, Ade Fisayo. Is there any question for Nifemi before we leave? Anybody? I'm sure we can always. Nifemi, do you want us to drop your email address? Oh, the best thing we can do, right, is if you have any questions, we'll be sharing this. We'll be sharing snippets from the webinar. We'll be sharing videos from this webinar on our different social media platforms. You can get to rewatch And if you have questions, you can always direct the questions to us in that comment section. Comment section. Okay, comment section, or so another thing we can do is also send a link to the video of the webinar, right? So every single person that came for so every person that came for the webinar today, you don't need to drop your email addresses. We'll ensure that every single person that registered will get a video to this webinar. And to the question you asked about sharing the list of tech solutions for the learning process we mentioned earlier, we'll ensure that we send you that list and also send you a link to the webinar video at most tomorrow. Somebody also asked the question. Oh, okay, I think we've answered already. So I think we are good to go. Thank you very much, Nifemi. Thank you for taking out your time. We know you're like super busy. Thank you for taking out your time to join us today. Thank you to everyone who came for the webinar today from different parts of Africa. We're really, really glad you came. We really hope you enjoyed this section. We put in a lot of work. Nifemi took it took a lot of sacrifice for him to be here, and we are really grateful. So you are welcome. So like we said, we'll ensure that this webinar is sent to every single person that registered, so you can get to go through it again and see what you have missed. Thank you very much. It was nice having you guys. What department do I work in? I am the product marketer for Octamile, but thank you very much. Thank you. Have a nice day ahead. Bye.
Thank you, everyone.